Hey guys, what's going on? Coming at you with a Tuesday morning video. Today I didn't buy any stocks yesterday or per se, so I kind of just wanted to talk about a big day. Obviously today, the Fed meeting is coming up at 2 p.m. Eastern time. Jerome Powell speaks at 2:30. So it's going to be a very interesting day today in the markets, to say the least. I could see it going really green or really red. In this video, I'm going to explain to you what I'm going to do if it goes up, down, stagnates, the market could do some crazy things today. So before I get into that, yesterday the Dow finished up 0.2%, S&P finished up 0.4%, NASDAQ finished up 0.2%. My portfolio closed out at 1.2%, so I destroyed all three indices. So it's a good feeling. It's been red for the past couple of weeks. I feel like we haven't had a green finishing week in over a month, maybe 5 to 6 weeks. So we're off to a good start for this month, and we're off to a good start, obviously, this week because we finished green Monday. So the Fed meeting. So there's a lot of reasons why I feel like this is a pivotal point, maybe in this peak fear market that we're in. Obviously, I really thought, honestly, January we're going to have a nice rally. Then the Fed U-turned. Then we hit basically, I thought max fear was in March, when the war started and inflation was going out of control. The Fed said they're going to have to aggressively rate hike, and there was a lot of peak fear. We thought the consumer was going to stop spending, which is not the case. Usually when there's high inflation, no stimulus, and a war with commodities going up like gas and stuff like that, and energy, it usually pinches the consumer and the consumer stops spending, which is really bad. So that was not the case. People, you see all these earnings come out, like the hotels, the credit card companies, travel stocks, and they're all very strong, beating expectations, have good guides. People are still spending. So that makes the Fed meeting very interesting more to see how they're going to handle the rate hike. So did I buy yesterday? I did say Friday that if we were going to see any short-term pain prior to the Fed meeting, like last meeting in March, I was going to do some buying. However, we haven't really seen a massive pullback. I think people are anticipating a really big bull rally after the meeting today. So I think people are trying to get in before the meeting. So I think people kind of are jumping the gun to kind of position themselves in. There's probably a lot of traders, a lot of swing traders. You have all these people playing basically options and playing the meeting. So I did not buy. So the reason being is, as you guys know, most of my stocks, at least my top 5, are very well built out. They're off their 52-week lows. Most of them, we've had a nice Friday, a nice Monday. So I really am not rushing into just plow money, and I've been really aggressively buying basically all year. So that's why I'm not buying right now. I want to see some pain, or I want to see something that the Fed says to freak the market out, to pull it down. We're a little above the NASDAQ 0% fib line that I have at 318, so we're above it. I would like, if I'm going to do any buying right now, I want to buy it under that 0 fib line. I don't know if we're going to get there again, but like I said, I've already built all my positions out, basically the ones I like. So jobs report came out yesterday also. We have 300,000. We beat job expectation new listings by over 300,000. So, basically companies are still hiring. Obviously if the companies are still hiring, they're not pricing in like a slowdown in the market, a slowdown in earnings to the point where they're going to have to lay staff off or stop hiring. Usually when jobs, start missing expectations, that's like one of the first signs showing that maybe we might need to scale back, or there's going to be a slowdown in the economy. So that's a good sign that the consumer is still spending, companies still feel good with where we're going and stuff like that. So that was a little, good news yesterday that we got. Cash. So right now I'm at 12% cash. I like sitting above 10% at all times unless we have some crazy freak event that really pulls the market down, like the S&P pulls down another 10% or 15%. NASDAQ pulls down another 20%. So I usually save that reserve for those moments. So really I'm playing with 2% cash right now, which is fine. I mean, my cash flow is fine. I have a job, so I have some I have some room and freedom there. So But, you know, I'm just being very stingy on what I'm buying. Like right now, as it's rallying, like I'm not really interested right now as a long-term investor. So a good market and a bad market after the Fed meeting today. If the market rallies after the Fed meeting and just does what it did last month, I'm not buying anything. I'm just going to sit on my hands, collect more cash, have more buying power if I see a pullback. Because, you know, obviously if it rallies like crazy, you're going to have swing and day traders take some profits. So eventually, and I don't even know if I'd buy if it's like a little mini dip and then goes back up. I'm probably not going to do any buying. But if it rallies up and then goes below the beginning, maybe I'll do some buying. But if I do that, I'll make a video and let you guys know what I bought and what percentage. If the Fed freaks the market out, gets real hawkish, and the market just crashes and goes well below the 0% fib line, I probably will do some shopping tomorrow. I'll let you guys know which ones I buy and how much and what percentage. So I have a scenario for both situations. So like as a long-term investor, how I look at it as no matter whatever way it goes, good or bad tomorrow or today, I have a plan. So like I really, you know, as a long-term investor, I don't care which way it goes. I have my positions mainly built out. If it goes up, great. If it goes down more, I'm just getting cheaper valuations for the stocks I like long-term. So it's kind of a win-win in my eyes. So that's kind of where I'm at. Also, we have to remember CPI data comes out next week. I personally think that we hit peak inflation at 8.5% last month. I think we're going to come in sub 8.2 or less. Maybe even sub 8. And if that, as long as we just see inflation peak, and then that would put rumors in, well, maybe it did peak and maybe we're going to continue going down and down and down every month. Well, that's going to be it's going to be a relief off the market. And it's going to be a bullish sign that, hey, maybe the Fed has inflation under control. The consumer's still spending. We're going to eventually, you know, I think their guide is like 4.5% end of year. And then their end goal is like 2.2 or 2.5% in the end of 23. So as long as we go this path, we'll be fine. So I'm hoping and I'm optimistic that it will be sub 8.2. Let me see where I'm at here. Yeah, so I'm pretty optimistic on what's, you know, I'm pretty bullish on the next like week and this week in general. So I could see a nice, you know, as far as green weeks, I could see a nice four to 6 week green rally throughout the week. Like also have some red days here and there to take profits, but as the weeks go, it will be primarily green. That's my opinion. So let me just roll through some stocks just that had really strong earnings, or not earnings, excuse me, strong days. Corsair Gaming, that's a top 3 position of mine. It was up 4.43% yesterday. There was Logitech earnings and they were very good. I didn't do a deep dive into them because I don't own that stock, but obviously Logitech is kind of like similar to Corsair. Corsair is a little more, it's for the younger generation, has a little more like pop to it, I guess. That's why I like it. But that was a good sign for the gaming industry, and it was kind of a relief because we thought that because the world's opening up, nobody's gonna play video games anymore for some reason, which is wrong. So that's nice to see a pop. What else had a nice pop here? NVIDIA, AMD reported after the bell, they killed it too. NVIDIA is rallying a little bit, 2.85%. That's a position I recently started buying. As you guys, if you've watched my channel the past couple of weeks, I started a position. Super happy with that. And what else did good? That's really it. I mean, TTCF did all right. It had a 4.6% day yesterday. I'm still down a lot. I haven't been buying that stock recently because my position is so built out and overbuilt. I've been just driving down. I don't want to be overweighted in any position, and I like my cost base for the long term anyway. So that's kind of my thoughts. Obviously, if you're not in NVIDIA or in Corsair or in TTCF, you're below my cost base. And if something you've been interested in, like if I didn't own the stocks right now, I would definitely buy them now. Obviously, like I said, I don't want to be over 20% weight in my portfolio in any stock I own. So I'm close to that with TTCF and Corsair. So I'm just holding. It's fine. You know, I'll be fine long term, and I will focus more on building out other positions in case, for whatever reason, one of them or both of them don't work out. I'll be fine. So that's all I got. That's really my thoughts. I'll make a video tomorrow about the CPI report, my thoughts. Hopefully it's a green day today. And yeah, make sure you guys subscribe. I'm really trying to get 800 subs by the end of this month. We're on a good track, and I appreciate every guys hitting the subscribe button. Till tomorrow, peace.